Intel embraces new technology and invested billions in proof-of-work mining. Meanwhile, Europe wants to ban that same proof-of-work technology, which is just math. Europe is at peak stupidity. Why is crypto crashing? Analysts list the key reasons behind this month's implosion. By now, any investor who follows crypto knows the market crashed and burned this week. The only question that remains is why? The truth is, there's no simple answer, although a handful of factors working in tandem may be to blame. Rising inflation, interest rate hikes, and geopolitical instability caused by the Ukraine war could be partly to blame, Bank of America global crypto and digital asset strategist Alkesh Shah told Fortune this week. Those factors have created strong headwinds for crypto. Consumer prices rose more slowly in April than in the month before, but still faster than economists had expected. The Fed hiked interest rates half a percentage point this month, the first time it has done so in 22 years, and in Ukraine, Russia shows no signs of letting up on its invasion. As a result, crypto fell big this week with $200 billion in value erased in just 24 hours on Thursday. Bitcoin, which makes up around 44% of the crypto market, dropped to a 90-day low of $26,350, although the cryptocurrency recovered to about $30,000 on Friday. It was still down 15% for the week and more than 56% from its November high of $69,000, according to CoinMarketCap. Another factor weighing down crypto is its correlation to the stock market, which itself has tumbled recently. Although long touted by supporters as an inflation hedge, Bitcoin is behaving more like a risk asset, Bank of America analysts wrote earlier this month. Bitcoin, the largest cryptocurrency by market capitalization, is much less correlated to gold, the most notable store of value, than it is to the S&P 500 and the tech-heavy Nasdaq. Good news about Bitcoin. When and how it will pump now. European Union parliamentarians will vote on whether to ban Bitcoin mining on Monday amid concerns about its environmental impact. The draft framework could outlaw cryptocurrencies that rely on an energy-intensive process known as proof of work, whereby computers perform complex mathematical puzzles in order to generate new units of the digital asset. Bitcoin is among several leading cryptocurrencies that uses proof-of-work technology, though Ethereum plans to switch to a system known as proof-of-stake that requires far less energy. The decision of whether to ban proof-of-work will be made by members of the EU's Economic and Monetary Affairs Committee, who will vote on the proposed markets and crypto assets framework. If adopted, new rules would require Bitcoin and other cryptocurrencies to phase out proof-of-work and switch to methods like proof-of-stake. Others warned that the ban could potentially lead to major price volatility for the cryptocurrency, with popular market commentator Crypto Whale claiming it will completely destabilize the Bitcoin network. Jeremy Allaire, founder of crypto payments platform Circle Pay, described the vote as extremely high stakes, and doubted that any such ban could actually be implemented. That such a proposal made it this far is extraordinarily concerning and unlikely to stand up to practical reality, he tweeted over the weekend. Last week, U.S. President Joe Biden signed an executive order to ensure responsible development of cryptocurrencies like Bitcoin, prompting a market-wide rally. The order also called for research and development into the design and deployment of a U.S. central bank digital currency, which could ultimately Bitcoin's dominance as the world's leading digital currency. Jake Chervinsky, a crypto-focused lawyer who serves as the head of policy for the Blockchain Association, warned that any potential ban on Bitcoin mining in Europe would be far more damaging to the crypto industry than President Biden's executive order. The MiCA situation is worse for crypto than anything in the USA, he said on Sunday. Tomorrow, the European Parliament votes on environmental sustainability standards that look like a pretext for a Bitcoin ban. If it passes, it can be undone in the next phase of the EU process, but it's very bad. Bitcoin could hit $100,000 within a year, Antony Trenchev, CEO of crypto lending firm Nexo, has predicted. He said that Bitcoin could fall in tandem with traditional financial markets as the Federal Reserve unwinds its massive stimulus policy, but eventually, a crash in stocks could force the Fed back into easing, he said. There are still some headwinds for the crypto market as the global regulatory environment remains fragmented and the digital currency still remains volatile. Bitcoin could hit $100,000 within a year, the CEO of crypto lending firm Nexo has predicted. Antony Trenchev told CNBC he thinks the world's biggest cryptocurrency can surge above $100,000 within 12 months. Quotation mark. He said he's worried about Bitcoin's short-term prospects, suggesting it may fall in tandem with traditional financial markets as the Federal Reserve starts unwinding its massive monetary stimulus program. But that may, in turn, give further impetus to crypto, he added, as a crash in stocks would likely mean the U.S. central bank eventually goes back to easing in no time. If Trenchev's forecast is correct, that would mean Bitcoin's price would have to more than double this year. For what it's worth, in January 2020, Trenchev predicted Bitcoin's price would top $50,000 by the end of that year. Everybody was laughing me out, he says. Trenchev's 2020 prediction didn't come true. Bitcoin only managed to hit a high of just over $29,000 that year, but the cryptocurrency did eventually surpass that $50,000 in February 2021. Crypto believers say the market has matured, and that there's ample liquidity now that major Wall Street institutions like Jump Trading and Jane Street are flocking to digital assets. Meanwhile, crypto whales like Do Kwon, the co-founder of blockchain firm Terra Labs, are buying up millions of dollars worth of Bitcoin in the belief that it could become a future reserve currency. But there are some headwinds for the market. The global regulatory environment remains fragmented and the crypto market still remains volatile. In particular, Bitcoin remains heavily correlated to the stock market, in particular the Nasdaq index. While stocks remain volatile, so too could Bitcoin. Bitcoin is still around 40% off its record high of $68,990.90. Other crypto executives don't expect as much price appreciation this year. In this particular moment in time we are living under, I would say, global uncertainty in the markets, not just the crypto markets, also in the stock markets, Paolo Ardoino, Chief Technology Officer of Bitfinex, told CNBC in an interview on Wednesday. So we are seeing definitely lower volumes on the crypto side. Bitcoin volumes have dropped over the last few weeks. So that is quite important as a metric because it tells many whales, many active market participants that were very active before are waiting a little bit on the sidelines. Whales are large investors that are able to move the market. Ardoino said Bitcoin could fall sharply below $40,000 but he expects by digital currency will be well above $50,000 by the end of the year. I'm a bullish person on Bitcoin. I see so much happening in this industry and so many countries interested in Bitcoin adoption that I'm really positive, he said.